Hi all, Ben here from East West, bringing you video number 15 in our Python for Finance for Python Beginners series. So in this video we're going to do something a bit different, and we're going to build a very simple moving average cross system. Now, I will stress once again, none of these systems or strategies shown in this video or any other videos constitutes advice. Now, all these systems are being coded as examples of how to put code together in a manner that answers a question. So before any investment, you must do your own research and decide what's right for you. So just a standard disclaimer there. Hopefully you are not foolish and rash enough to risk large amounts of money basis one thing you see on a YouTube video. With that being said, today I'm going to create a new folder in our Python codes folder, and I'll name this folder System Examples, but you can name it whatever you like. So let's get going into that folder, and we'll open a new Jupyter notebook. So first of all, I'll fill out all the headings and import the libraries as I always do. And all these libraries, there's nothing new here. You should be familiar with all what we're importing. So the first step here is to simply import some data. And here I'm going to import data from the NASDAQ for the from the year 2000. So we'll just download that, and then we'll just check to make sure that that downloaded correctly, and it did. Next, I'm going to drop some of the columns that we don't want. So in this instance, we really only want the close column. Next, I'm just going to set some variables that we will need for calculations going forward. So let's create a start balance for our investment, and also define the period of the moving average we want to use. Now, I've just got 200 loaded here. I'm just going to change that to 50 for our initial purposes. So next we can add in the moving average, and we'll just use the TA library, and we'll use the variable that we set here in period as the window. So now we need to go through the steps to calculate the returns and the drawdown of a buy and hold strategy. Now we do this exactly the same way as we did in video 13 and 14. So hopefully you are coding along, and if so, it may be handy to have the codes from those videos open, the notebooks open, so you can copy and paste the relevant sections of code across. Just make sure if you're doing that, that all the data frame names and column names match up. This sort of stuff. Make sure that they're all going to be the same. So run this cell, and hopefully you get no errors. And if you do, then you just need to go back and make sure and double check all the aforementioned. Now, I'll just quickly add in the calculations for the drawdown as well. Now just take note here at the bottom, I've assigned a variable as benchmark drawdown. Now I'm going to use that later on. So next we need to create an entry signal, and we do this by simply creating a new column here that I've called df signal, and then we type in df.close is greater than df.ma. So all this is doing is just saying when the close is above the moving average. Now when we run the data frame, or bring up the data frame after running this cell, we can see that the line of code that we just typed in returns a simple true or false in the signal column. Now we can use this column to tell the program that when the condition is true, i.e. when the price is closing above the moving average, then we want the day's change to be reflected in our account balance, as opposed to our benchmark where all daily changes affect the balance. Conversely, when the condition is false, i.e. the price is below the moving average, then our system has exited its position, and we don't want the daily change to affect the account balance. So that sounds like a bit of a mouthful, but really it's quite simple. Let's code that up now in the next cell. So here we've created a new column that I've called strat returns. Now the value of each row is determined by this line of code. So here we use the MP_where function, and again in plain English what this is saying is if the value of the signal column MP_where df signal .shift.1, so the value of the signal column one row back is equal to true, so if this condition is so, if that's true, then make the row value the same as the daily change. So that's what we do if it's true. And if it's not true, make the value 1. Why? Well, we'll see that in the next step. So here I've created a new column that I've called Strat Balance, for strategy balance. Now we apply the same code as we did for the benchmark balance, which we did up here, this one. So let's quickly bring up the data frame just to have a look. We'll just bring up the last 20. So now when the strategy returns column is the same as the daily returns, i.e. the condition is true, the strategy balance will change accordingly. But when the condition is false, the strategy balance will be multiplied by 1, which of course means it will not change, as anything multiplied by 1 equals itself. And then we need to do a cumulative product of that calculation, like so, which is the same as we applied to the benchmark. So next we need to go through the process of calculating the strategy drawdown. Now this is done the same way as the benchmark drawdown, so some copying and pasting of the code here can be applied, but just make sure that all the relevant details are changed and correct. So next I'm going to put all the results into variables. So firstly, we need to work out the overall return for the buy and hold and the strategy. And we can do this by dividing the first balance by the last balance, taking 1 away from that total and then multiplying by 100 in the traditional manner. Now we call the last balance of the data frame today's balance by putting in the -1 within the square brackets, and then we're just dividing by the starting balance, which was or represents the variable that we assigned called balance. So that starting balance, you remember, was 10,000. Now we do the same thing for the strategy balance, and then it's probably a good idea to round these totals. Now we have our 4 basic variables that we want to have a look at, so let's call them up. So we have the ones that we've just created, benchmark and strategy return, and then we also have the benchmark drawdown that we've created and the strategy drawdown that we've also created. So let's just call those up by running this cell. And we can see here that the benchmark return was 170%, but the benchmark drawdown was nearly 78%. The strategy returned 123%, not as good, but the strategy drawdown was much better at only -40%. So now let's present these findings in a little bit more clarity by printing them out in what's called an F string. So we simply type in print and then open some brackets. Now within these brackets, the first thing we type is F, and then we open some inverted commas. You can see here it's gone red. Now we type our message within the commas. Now when we get to the part where we want to put in the variable, we open a new set of braces or curly brackets. Then within these brackets we insert the variable that we want to print. Then we need to close off the original inverted commas, might double up there, and make sure that the bracket's closed. Now we can just repeat the process for the other variables that we want to print out. So once you've done that, why don't you run that cell and for yourself and see what comes out. Hopefully your printout looks like this. Now from what we can see, the return of the buy and hold was, this is basis the close for sort of today that has brought up. So the return was 169%. The maximum drawdown for the buy and hold was 77.9%. Return for the strategy was 123%, and the maximum drawdown was 40%. So let's finish up by doing some basic plotting. First, let's just plot the closing price and the moving average. Now, we're using a 50-day moving average here, so when we bring up this chart, and it is quite a long chart, but when we bring it up, it's difficult to see where the crossovers happened on these basic charts. So, look, more advanced plotting and advanced charts will be covered in future videos. But let's also plot the system balance versus the buy and hold balance. So I've made the system, the buy and hold balance in red and the system balance in blue, or the strategy balance in blue. Now we can see here that the actual strategy did better until the late 2010s and the impact of COVID. Now the volatility of the markets during this time probably led the system to be getting in and out of the market a lot, whilst the buy and hold ran all the way to the highs. Now interestingly, we can see how the two lines are coming together as the system is avoiding more of the sell-off than the buy and hold, the sell-off that we're currently seeing. Now let's quickly go back and rerun the entire code, but this time let's use the 200-day moving average. So if we scroll right back to the top of the code and we change this period to 200, now all we need to do is to go kernel, restart and run all cells. And we just let that run through. Now let's take a look at our results. When we used the 200-day moving average, we've got a strategy return of 398% and the maximum drawdown of only 26.31%. So we can see there's a big difference here and a much better performance. Now, whenever a system looks this good, you must stop and ask yourself why that is so. Now, delve into the details and make sure that some sort of anomaly has not skewed the results to create a false outcome. Now, in this case, we know the system has avoided the worst. I'll just come down here. We know the system's probably avoided the worst of the 2008 and also the worst of the current sell-off. Now, you can see in the chart here, this chart here, where the system balance line goes flat whilst the closing line keeps falling. You can see it here and you can see it very pronounced here. Okay, so that'd be around that 2000 tech bubble, tech wreck. You can see here that the system's out of the market, so the line stayed flat. And you can also see here it's very pronounced in this current sell-off, because we are dealing with the 200-day moving average where the system is out of the market while this sell-off has accelerated. So a few things to consider here. Now, firstly, we have used an index. If you're going to do the same thing with a stock, then things like stock splits and dividends have to be considered, as they may have a large impact on the final results. Now, secondly, commissions are not taken into account here, and they can become an important issue in an active system. Secondly, you may have thought whilst we were doing our calculations that there was a slight problem with working out the balances basis the closing prices. Now, it's fair to say that we do not get a signal until the market closes, so how can we then calculate our returns basis being filled at a closing price when we could only begin our position from the next opening price? That's a legitimate question, and it's certainly one that can be solved. Now, the answer to that is you have the basic template. Make a copy of the code and try to solve it on your own. After all, the aim here is to try to get you self-sufficient in coding. So get in there and try and code an answer by yourself. I may do the same and present my methods in future videos. So that's it for this video. Stay tuned for the next one. Thanks for watching.